My friends, what's going on? Let's jump in here and do the weekly Outlook TA video for AMC. Before we get started with the video, you guys know the deal. Nothing I'm giving you is financial advice. It's just for educational purposes. That way you can make wise decisions for yourself, your family, and your portfolio. If you haven't done so already, please follow me on Twitter, Colin_Gladman. Easiest way to see what I think is going on. If I think there's any important news, I'll tweet that out as well. And then lastly, if you haven't done so already, please like and subscribe, drop a comment in the video, all of that good stuff, help the channel grow. Let's jump into it. All right. So we're going to go through a bunch of different things today. I'll try to keep it as short as possible. I know you guys, ADD is rampant and you can't stay focused for very long on a video, but like I said, I like to be thorough, but I'll also try to move through things as fast as we can. So starting out, let's look at AMC on a monthly basis. So as a technical trader, if I was looking at this doesn't matter if this was a 1 month timeline, this wouldn't matter if this was a 1 hour timeline, it wouldn't matter if it was a 5 minute timeline. You would be looking at this from a standpoint of AMC had a breakout, okay, from its former resistance, and it pushed up and it created a new supply zone, came back down and tested its former demand zone and is now pushing back up. So if you were just looking at this from a technical standpoint, you could be looking at this easily as wow, we're about to have a breakout and push back up here, then probably come back down and retest, and another series of that. And I'll kind of show you what I'm talking about later as we get into the more micro view of AMC. But overall, just from a monthly standpoint, this is a very promising looking chart of a potential breakout towards the upside. Now, great setups don't mean anything without follow through. Let me say that again. Great setups don't mean anything without follow through. So of course we need the follow through. I see patterns in different technical things, break down or have false breakouts just as much as you see actual breakouts. But just like I tell my Discord all the time, if you consistently play great setups, you're going to have way more successes than you are failures. Okay, so right now, AMC and GME both have great technical setups. Another thing that you can start to see, and shout out to Rico's Trades. If you don't follow him on Twitter or YouTube, I recommend doing that as well. But he was talking about how we are only essentially the first week of August, and we're already starting to see good volume come in. So far, we've got 300 million shares traded just in the volume just for August so far. So we definitely want to see this candle right here. We want to see a continued push towards the upside. We obviously have our trend line from down here in January where AMC reached its all-time low before the January run happened, and then has come back up, and now we have 1, 2, 3, 4, 5 touch points on that same trend line. So as far as I'm concerned, you typically need 3 touch points to consider it a decent trend line. We have 5. To me, this is a very solid trend line. And we're also bumping up and got rejected off of essentially our bear trend line. So I've seen a bunch of people have a bunch of different opinions on what numbers we need to get over before we are officially back up over the bearish trend. And the reality is all trend lines are not unbreakable lines or anything like that. What they're giving you is they're giving you a range of support and they're giving you a range of resistance. So if we drop down in here into the weekly time frame, once again, you can see that as you get in lower time frames, you might have to do a little adjusting on your trend lines. So kind of the same picture though. We came up here. This would have been before the June run. This was AMC's demand zone, so it went through an accumulation period before you had the markup. Then it entered a distribution, and now hopefully what we're going to do, unlike in March where we got halted, is we're going to come back up here and we're going to test the supply zone once again. And Just like I also tell my Discord, if you have big, strong pushes up towards your supply zone, then you need to, be careful about playing different supply and demand zones. You want to always make sure you're watching, what the price action looks like in those. Then, if we get over here, and now we're looking at the daily chart. So one of my favorite patterns to play on smaller candles, or I'm sorry, not smaller candles, but like there's candle patterns, and then there's kind of like 2-day patterns where you get like a bullish engulfing candle or a bearish engulfing candle. And bearish and bullish engulfing candles are some of my favorite patterns to play. For instance, if you look right here on May the 25th, you had a bullish engulfing candle and you got a nice push up. So I like playing these type of candles. The reverse is true, with bearish engulfing. Once you get a bearish engulfing candle, that can mean not good things. For instance, right here, look, April 25th into April 26th, then you got a bearish engulfing candle, you got a big push down. So we have a nice, big old fat daily bullish engulfing candle. And what I really like about this bullish engulfing candle is you've got serious volume going on with it, almost double the amount of volume. The day previously was 66 million. Basically, with AMC's float being right around 500 million shares total, I typically look at anything over 10% of the entire float being traded in a day is when you really need to go like, whoa, what's going on with that volume? What do I need to see? So obviously we've got a lot of excitement with the APE dividend that is going to be coming out here in the next couple weeks. So that should help with some buying pressure. But like I said, you got this nice bullish engulfing candle on a lot more volume. And what's nice to see is as we've had this big push up here, the volume has been increasing with it. That is an indication that the bulls are in control of what's going on. Now, if we get over here into the 5-minute, first, let's just, hold on, I got to do this just because it was just so beautiful. Let's look at this beautiful price action that we had on Friday. So after the gap down, we had the retracement back down to that 15-16 area that I was hoping for. Like Trace talked about in his video when we were talking about it, the 618 retracement was huge off of this move right here. And essentially, you had ascending triangle after ascending triangle. So this is just another one of those examples of don't listen to the people who tell you TA doesn't work. Yes, there are moments where there's fake outs. Yes, there are beautiful setups that don't work. But once again, you just keep playing great setups and you're going to be doing just fine. So here's an ascending triangle. It's basically where you have a flat top where you have a constant uptrend pushing up towards that flat top. Statistically, this is going to lead to a breakout to the upside. So you break out to the upside, you came down, you retested the top of the range. You push back up, formed a flat top with an ascending trend line, push up, push and pushed up again. Then you had another flat top, pushed up into ascending trend line, and I was tweeting this out. I was like, again? And now what we have here is we had a bull flag to finish out the day. Now, let's talk about, once again, what I always do, which is our most likely situations. The reality is here is things are starting to run just a little hot, okay? So if we go back here to the daily and we pull up the RSI, we are at 77 on the RSI as of Friday. So historically, what is the most likely thing to happen? Well, let's just look at comparatively what happened in March. Now, March, I won't jump into that too much. That halt was BS. But once we got up here and it got to 79, then we saw a big retracement. So the reality is we're up here in this territory again. Even if you come back here, here's the June run, here's the January run. Once we get up into these drastically overbought territories, is historically and technically where you're going to see a pullback. Now, RSI, there's no guaranteed range of when that is ever going to happen. If it's overbought, but there's a ton of buying pressure, well then it can stay overbought. Just like if it's oversold and there's still a lot of selling pressure, it can get pushed further down. What the indicators do is they help you with your entries and your exits of knowing when, hey, this might be a good time for me to take profit. Hey, this might be a good time for me to, enter a trade. So there's not any one indicator that is going to save, your trading method or anything like that. That's why I'm always talking about, like with TA, you need all the tools in the toolbox. Let's use RSI for an example. If RSI is your hammer, but you need to put a screw in and you don't have a screwdriver, well, you're in trouble. I mean, you can sit there and you can try to hammer that thing in all day and you might even have some results with it. But the reality is the best thing to do is use the right tool for the right job. So the daily timeline shows that we are getting overheated. I haven't even looked at what the hourly is showing us. So hourly is not too bad, but once again, got up to this area. Massive push down. What's the 4 hour looking like? 4 hours looking pretty hot still. So I think my personal opinion is we are going to see a pullback. Now, what level are we going to see that pullback to? Well, that's a great question. So when I'm looking for pullbacks, I like to rely on fib retracements. So if we retrace kind of our most recent move right here from its bottom to its top, then our most likely retraces, so good bullish one would be right here, back to the top of the range, which would be the 382, right around $19.36. Another one could be the 0.5, around 18. And then, of course, we have all reliable of the golden pocket, which is between the 618 and the 0.65 retracements, which is going to be between $17.25 and $16.19. Now, typically, the more bullish your move is and the more bulls are still in control, you're going to see less retracements, okay? So what I would love to see to show that the bulls are still going to be in control is probably about right here, somewhere around the 382 ballpark in that $19, and we'll call it $19.50. That would be, a strong reaction once we get to that point in time to let some of these higher time frame RSIs cool off. That makes a lot of sense to me as far as what we would be looking at from a pullback standpoint. So I do think we might see a continuation into Monday, but I think that continuation could lead to like a short pop in the morning before we retrace throughout the rest of the day on Monday and then into Tuesday, and then potentially the T+2 with how many calls came in the money at the end of trading last week. Once again, max pain is important, but always take it with a grain of salt, especially when you're in highly volatile times like earnings. So the T+2 settlement, it'll be interesting to see what happens. So I think we might see a push-up Monday morning, retracement rest of the day Monday and Tuesday, followed by good pushes up into Wednesday, Thursday, Friday. And I think overall, we are going to see, some pretty good, strong momentum leading into the APE dividend. And then once APE is released, then I think we could see some pullback at that point in time. So last but not least, let's jump into the cycle chart. Now, before I dive into this too much, I want to be clear. None of this is a crystal ball and none of this is exact levels. Nothing about TA is exact crystal balls. It's giving you probabilities. I always say never look for the cycles, to be exact one-for-one candles or anything like that. What they can help you with is, the timing of the move and some levels to look for as far as where the stock might go to, plus its retracement, okay? I've always said that I'm not a big MOAS guy. What I am a big fan of when it comes to stocks like Tesla, like GME, like AMC, is I do believe in kind of cyclical gamma squeezes, so to speak, where when you have the perma bulls and the perma bears and they're always fighting each other, when one side is fully in control, then you see either big pullbacks or big pushes upward, and then you go through different distributive and accumulation patterns. So I changed a little bit on my cycle chart, and before you freak out, he's moving his lines, That's not what I'm doing, okay? All I did was before, I kind of had a yellow line that was just running up here, and instead I turned it into a channel for today's purposes. So what I'm looking for here is, once again, I'm looking for similar movements. So this is tracking the pre-June run, and what we had was we kind of had an upwards accumulation pattern before the big breakout that happened. Then we had the massive dump, and then we know what happened came after that. You know, it just boom, 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 boom. But even as you get in here and you look at the June run, there's still lots of push-ups and pullbacks. So it's still not just, it didn't go straight up, okay? And I mean, look at this. Sorry. This is where my ADD squirrel kicks in. Look, just like Friday. Just series of flat tops with upwards pushing, playing out over and over and over and over again. So this is what you like to see right here. Okay? All right, sorry, enough of that. So this is the channel that I've been looking at. Let me zoom back in here where I just was. Appreciate your time and patience. As always, guys, anytime I'm doing these videos, I appreciate your time. I know it's valuable to you. It's valuable to me. My time's valuable to me. So, like I said, I appreciate you taking the time to watch. Please like and subscribe, yada, yada. So what we got here is we've got the push up, and then we kind of had a big pullback. So right here, we had a nice push up to the top of the channel, then we had a big pullback. Then we had another push back up that tested towards the top of the channel. Once again, we had another big push up. This one actually broke out of the channel a little bit. Then the pullback kind of made an M shape. Pullback, kind of made an M shape into an accumulation pattern before the next push up. So pullback, accumulation, M shape pattern before the next push up. Now this one right here, even though it's the same pattern, did not reach the same level that I was hoping for. I was hoping this one was going to kind of come all the way up here to about the $20 level. Did not do that, but the formation and the pattern is still the same. Then once again, M-shape retracement, push up, those M-shape retracements. Then we had push up, pull back, another big push up, all the way down. And that's the one that took us to this orange line right here. And where was that orange line? Well, let's zoom out. That orange line was right here, right before the little peak. So it came up, testing that orange line area, pull back, before then it made its way to what I've always called the launch pad. So here we are, orange line, okay? Oh, what's that? Well, that's an orange line. So I said in my weekly Outlook video last week, my most bullish case scenario would be the push to 22. Why is that level so important? Oh yeah, it's because that was the top before it reaccumulated and then had the big push up to the March halt. So, purely apples for apples here. Push up, reaccumulate, run, massive distribution down. Accumulate on the way up, time for the markup. So, push up, reaccumulation down, massive run. Massive distribution all the way back down. Upwards accumulation, test, 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 push down. So, I'm hoping for the push down, something like that. And then we really start to run through this. That's what I would like to see. Pretty much a move like this right here. Push down, boom. Okay, and that boom would take us to somewhere in this $31 to $34 range. So here, then we probably get some rejection for a little bit, reaccumulate, then we start another move up. Like right here. Where did this stop? This stopped right here. Where's this one going to stop? Probably right in here. And then we want to see another accumulation, and then I'll probably have to drop and retest. Sorry, running out of space here. So let's say we drop. Whoops. We drop. We retest the top of the previous range. So this one dropped. Retest the top of the previous range. Retest the drop of the previous range. Move around. Then it's really time for a markup. So once we are here, this move right here is what I've always called the launch pad. That's what I'm going to be looking for. All right? Hope this video was helpful to you. I hope that you can see that when I talk about cycles, I'm not just pulling stuff out of thin air. I'm using previous moves to anticipate future results. Okay? So this is what I've been looking for. This is what I've been tracking. Yeah. I mean, this is it. Once again, we're going to take it one day, one candle, one level at a time. Now, full disclosure, the thing that is making me concerned about this is, honestly, how is all this ape stuff, going to play out? Also, too, guys, timing on this is irrelevant. Don't look down here and say, oh, so not till April of 23? What? Don't stress out about that, okay? I have no idea exactly what... I don't concern myself with the time. All I've got is time. What I do concern myself with is what are going to be the exact levels that I'm going to be looking for. So, anyway, hope this is helpful to you. Once again, that's all I'm trying to do, is I'm trying to give you helpful information so you can trade your plan, make wise decisions for yourself, your family, and your portfolio, and let me know, okay? I have no problem with respectful debate and constructive criticism, but if you just come at me and you want to be rude or anything like that, I'm just going to be dismissive of you. All right? Let's have a great week. Let's hope for the best. Let's expect for the worst. Be prepared for everything. I'll see you on the stock market, the battlefield, however you want to look at it. But just stay calm. No emotions, my friends. I'll see you guys on the next one. Have a good week.